let's find out exactly what our market pros are thinking. Here they are now, Key Advisor Group CEO Eddie Ghabour, New Street Advisors Group and CEO and CIO Delano Saporu, and Gibbs Wealth Management President Erin Gibbs. First, we got to start with this Janet Yellen news, because from that moment it was announced yesterday around 2:50 that it was sort of confirmed, the market has been up. And why not? When she was the head of the Federal Reserve, the S&P rallied 59%. And the only time that she really ran afoul of Wall Street was that loan rate hike in December 2015. She held off. She didn't hike again until after the election in 2016. It's clear Wall Street loves Yellen at the Treasury. So, Erin, what is it about Janet Yellen that Wall Street is so excited about?
Well, for one, we're very familiar with her. It's someone we know. We know that's very methodical.
You know Elizabeth
thoughtful.
Warren.
This is true. Admittedly, you're right. I think we have very, very fond memories of the Yellen years. No, I think it's because we know that she's very data-driven, very thoughtful. She's not going to come out with anything extreme. So it's something that you have an idea that she's really going to work towards the health of the markets. And I think that's what the market is saying, is that she's a supporter of the U.S. markets.
Yeah, Eddie, I think someone would say easy money, money printing, money printing, money printing. And when you're not really sure what to do, more money printing. Wall Street loves that, doesn't it?
They sure do. And look, with Janet Yellen, you have someone that we feel like the market feels like is going to continue this path versus someone that's going to kind of come in and tighten up monetary policy. So she's proven herself when she was the Fed chair that she's pretty dovish. And again, the market loves that.
All right, well, there's a move in the market, certainly, and the broad market, by the way, it's going to get some tongues wagging about irrational exuberance, but I think it's too early for that. However, the moves in things like electric vehicle, those fuel cell stocks, they have been the very definition of parabolic. They already were in orbit, and yesterday Dan Ives hiked his target on Tesla to 1,000. Eddie, I want to go back to you real quick, because Tesla's a name you've mentioned on this show. Do you still like it? Do you like others in this space?
I still love Tesla. I'm sticking with Tesla for the right investor. I feel like they're best of breed. I will say, for these day traders and young investors, I think it's great they've gotten into these space. But if you got a 90% move in some of these in a month, take some money off the table, play with house money, and wait for it to come back in. But I do think Tesla long-term is going to reward investors.
Yeah, I had a stock yesterday on my trading service. It went up 234% yesterday, DPW. I mean, we were out of it before the day was over. Delano, I know you've got clients in NEO. I got stopped out of NEO at $3. Stopped out. I feel real dumb. I hate to even admit it. So how much room on the upside is there?
I think there's still room on the upside. So for certain clients that it makes sense, we're in NEO and Tesla, and we're looking at the growth in those industries. That's the biggest thing, is younger investors certainly are looking at the growth in those industries and how those industries can really reshape things going forward. And when you have NEO and what the Chinese government is looking to do as far as having eco-friendly vehicles in 2035, I think there's still room for the upside in that play.
It's just absolutely amazing, because globally, and particularly in America, the actual adoption of these vehicles to the point where you might justify these moves seems far away. But I do want to bring up, while we're on the topic, Elon Musk. Newsflash, folks, second richest person on the planet, in this country, right? So he got there with Tesla stock. And I think it's important to note that anyone watching this show could have owned this stock. I mentioned Tesla on this network at $40 a share. And the thing is, I know so many people who have been sitting on the fence, even more people always complaining about wealth disparities in this country. You got to realize it's the stock market, and anyone can and everyone should, in my mind, invest. The people who are taking risk are getting the big rewards. And I just wanted to say that, because stop complaining about everyone else and get in the game yourself. By the way, these so-called reopening trades, I call them normalization trades, are sizzling as well. And this time, though, I got to tell you, it doesn't feel temporary, like people going back and forth. Erin, before you get in these airlines, maybe for a couple of days, a trade, the cruise liners, but now it feels like you might want to be in these stocks as long-term ideas, not necessarily trades.
Yeah, Charles, November so far, just month to date, November has been the biggest reversal month, meaning the laggards, all the losers from earlier this year, are now the winners this month. And this is the biggest reversal month since we've seen since 2009. This is, coming out of the 2008 recession. So this is a real trend and a big difference. And it's not just your airlines. Energy has been one of the biggest winners for November. But also, I'd say look down across the market cap spectrum. Small caps have almost had a double the pace for the S&P large caps for November month to date. So that's another area that people can really look at and get into. And that's something that probably is going to last much longer than just November.
I love the Russell 2000 move there. The top stocks there, of course, Penn Gaming, Caesars is in there, Churchill Downs is part of that. I mean, to me, if you want to say where are the hot niches in this country, it might be a better representative than the other indices. Delano, how are you feeling about some of these other areas? Is this a trade, or can you really start to build positions in the hotels and the airlines and the cruise ships?
Yeah, I think for clients, I've been spreading and making sure to hedge with our value and cyclical stocks, mainly through ETFs. But as you mentioned, if you have, retail like Dollar Tree, which it reported earnings earlier this morning and did really well, I'm looking for that essential nature in the business, as well as having a strong retail strategy if we're really going to fully expose to a single name. But, the trend is increasing. And I think, if you're smart, you're going to have to be picking at that trend and making sure you have positions, carefully in your portfolio. But that's something that I'm definitely looking for and adding to for clients.
Of course, Erin just mentioned the oil names. Energy patch up before today. The oil sector, energy up 37%. A lot of these broken down names are really starting to look a lot more compelling. It's not just the oil company stocks, but a whole lot of other niches in this market. So on that note, Eddie, are you looking outside? I mean, I look today, the material names look phenomenal. The 3D printing stocks look phenomenal. It just feels like broken down areas where you want to start to sort of sift through the rubble and find your opportunities.
I do. A few weeks ago, I shared with your viewers that I felt like it was a good time to get into Boeing. I like the aerospace. That's been beaten down this year. I agree with small caps. I think the Russell will be the best performing index 12 months out. And look, I love the travel and entertainment stocks. I think that for the right investor with the right risk tolerance, there's so much pent-up demand that I think the second half of next year, we will probably have record amounts of money spent on travel. So I think if you have the risk tolerance, buy those stocks, hold on to them for a year, and get handsomely rewarded for the risk that you took.
I know I'm going to every concert in the tri-state area. I don't care what the genre of music. And then I'm going to get on a plane, Erin, and go somewhere and watch the same show over. Real quick before we wrap this up, though, it's all, we're all excited. Everyone should be, I think. But, Erin, what should we be worried about? What's the number one concern near term that maybe is being overlooked right now?
Well, I'd say certainly some of the risks that we have in mega concentration, some of the regulatory issues that we could be facing even post-pandemic. And then, of course, any type of hiccup, if we see an issue with getting the vaccine out to people that could delay it. But I think we're very happy about the medical responses and the overall economic recovery. So I think it's really about how long is the recovery going to take, and how long is the heightened unemployment going to take. But overall, we see that we're going to be out of the woods by the third, fourth quarter.
Well, the good news, I got Rick Scott coming up. Senator Scott will talk about the fiscal package, and I've got Secretary Azar will talk about distribution. Erin, Delano, Eddie, thank you very, very much.